If you've ever worked extra hours just to see a big chunk of your overtime pay taken out in taxes, you're going to want to listen to this episode. The new tax law is changing the way overtime is taxed or not taxed. And today we're breaking down what this means for workers. We'll be talking about how much more you could actually take home and whether there are any strings attached. I'll be asking Caitlynn all these questions that you're probably sitting there wondering. And so you'll leave this episode with some clear answers. All right. Welcome to this week's episode of The Unfiltered Profit. The Unfiltered Profit.
Sometimes we just like
goodness.
to add extra words to our titles.
Yeah,
It's fine.
It's that kind of week, but that's okay. It's not going to hold us back from talking about taxes today. So, in this episode, we're diving into the new rules on taxation on overtime pay. So, Caitlynn, let's dive in first by just defining overtime pay. Who is even eligible for overtime, and how will they know if this applies to them?
Yeah, so we go based off of the federal definition of overtime, federal labor standards, something like that. And what we are looking at is if you are hourly, so over 40 hours starts qualifying for overtime. If you are salary and you make under about $35,000 a year, that is when, again, we start talking overtime. The idea being that your employer can't just make you work all these hours and not pay you for it. So we're going to, for this law, for OB3, benchmarked it off of the federal law and the federal rules. So that is where we kind of begin. It's like, hey, that's just what overtime is. Generally, you know if you're overtime, but there are industries that it's more common with, like we've seen contractors, construction, plumbers, that kind of work. You might see it in the medical field. We've seen it in like the pilot field. A lot of times folks will try to like tell you that it's not allowed. So they'll make sure that you only work your 40 hours because they don't want to pay overtime because it's time and a half, right?
Yes.
It's expensive.
And we've even come into contact with clients that are like, oh, I'd really like to pay for travel time, or I'd like to pay for these different aspects, but all of a sudden it's throwing their employees into overtime. And I'm like, well, if you want to pay for that, like we've got to do it the right way. We've got to pay them overtime.
Yeah.
And just a caveat, we're basing this conversation off the federal labor laws, but each state also has their way that they kind of break apart overtime pay.
Mm-hmm.
So if you're an employer listening to this, always make sure you're referring back to the state guidelines, and your payroll software, your payroll provider will guide you there too. But doesn't mean you don't need to know it, and make sure that the payroll software is doing it correctly, because sometimes it doesn't.
Always. Yes, so important. And I guess before we go too much further, the piece about no taxes is the employee piece. So as an employer, enter it in how you're supposed to, follow all of the federal and state guidelines, but this actually is not going to affect you as the employer and whether or not you're taxing your employees overtime. So I think that's important because we do have a lot of business owners listen, but this is definitely more on the I'm an employee side, and how does this affect me?
Yes. And so business owners, it's a great thing to understand because your employees might ask.
Yes, they will.
And yeah. They always ask.
So yeah, you definitely need to have a concept of it, because I have no doubt that anyone and everyone is getting questions about it. But I just want you guys to know, in terms of your payroll software, if you're entering it incorrectly, that's really where it ends for you as the employer for now. At least that's our thought process. And we'll get into a little bit of those details later.
Okay. So let's dive into some of the Q&A that's around this. All of the overtime now tax-free, or just a portion? And I guess I want to caveat that. So I'm compounding a question on you. What kind of tax? Are we talking like the Social Security and Medicare, or is this just income tax? When we say tax, how is that defined?
Yeah. So we are talking about income tax only. So again, that's where the employer is not going to see the effect because they don't have to adjust Social Security and Medicare. So it's income tax only. And it is only the and half part. So when we say overtime is time and a half, we're talking about the and half. So it is not all of it, and it is not going to be adjusted for on your payroll and your W-2. It's going to be adjusted for on your 1040. And with that, so we're going to have whatever that and half is. And then as an individual, if you are single, up to $12,500 is now able to be deducted. If you're married, you can double that, $25,000 on a joint return. If you are married filing separate, They're not being nice. They're like making sure that you don't get those benefits. Just this is one of those times where we talk about like a marriage penalty that's come back. And so if you choose to go married filing separate, you're not going to see the same benefits as if you were single or joint return. So just keep that in mind. So yes, that and half on your tax return. And it's going to be, we're going to get super technical here, below the line. So we're not going to adjust our AGI. And that AGI is a really important number for a lot of things. Our IRA deductions, our qualifications for like QBI. Like there's just a lot that goes through that AGI.
Yeah.
This is going to be below that. So this is not going to help you tax plan in that aspect of like, oh, if I lower my AGI, I suddenly will qualify for things. That's not this deduction.
That is very interesting because I know that there are people out there that work a ton of overtime. And so if you were to take their hourly rate, they make a completely different salary than what they actually take home at the end of the year because they work so much overtime.
Mhm.
And tax planning wise, that is unfortunate that
It is.
it is still part of that AGI. And so I want to throw some numbers to what you just said because I like for people to be able to hear it both ways. We all learn in different ways. So if
Mhm,
you work and your hourly rate is $20 an hour,
mhm.
and now you're in overtime, so you're getting 1.5 times. So now your overtime rate is $30 an hour.
Correct.
It's only that additional $10 per
Yes.
hour that is tax free. So if you work 45 hours in a week, now you have $50 that is tax free, the 10 times
Yes.
the 5 hours.
That can qualify you for a deduction on your return for your income
Yes.
tax. Yeah,
Yes.
right. Because
Yes.
it's so hard
Sorry.
because you're like, oh, it's tax free, but it will be withheld as you're going through the year.
And so it's basically setting you up. Like if you're somebody that works a bunch of overtime, it's setting you up potentially to have a decent refund.
Yes, because the IRS has come out and said we're not adjusting our withholding tables. We're not changing anything right now. So even though this law exists and it's applicable from now until 2028, for 2025 at the least, the IRS has said we're just leaving withholding tables as is. So you will likely over withhold based on all of this if you work a lot of overtime.
Okay. And let's rewind back into the 12,500.
Yeah.
Throw that at me again. What was that?
Yes. So you can deduct up to $12,500 if you're single of the half part of your overtime pay. So
Okay.
that is what is eligible. If you're married, up to 25,000. So the benefit is if only one of you works overtime and you're married, you get that 25,000. If you both work overtime, combined 25,000.
Okay. That is very interesting. I
Mhm.
missed that part of the law. So when you threw that out there, I was like,
Just like yeah,
wow, it's not it's not like you can consider all of that and half. You can if you work a ton of overtime,
right.
you're
It's not quite the benefit, right? So that's the
yeah.
thing. And this is how as much as this is the part about tax law I love, but like as much as you can sell it and it sounds really great, when you get into the details, you're like, but does that
Mhm.
change anything or did it just add complexity to my life? And for 2025, it added complexity, maybe a small deduction, but complexity. Because the other piece is how do we determine what that half is? Because your W 2 is going to tell you what is in box one. If you look at a W 2, if you work in payroll, if you ever get it, there's no box that says this is your overtime pay, right?
And it also doesn't list your hours. So it's not like you could even take a standard work year of 2,080 hours and say, well, all the hours over that. We don't list hours on a W 2.
Mhm.
I'm not sure that all places even show hours on a pay stub. So if you were to like log into the payroll system, you also might not see that depending on how payroll is reported.
Correct. So, what do?
Oh,
We don't have full guidance from the IRS on what we do. We are told that we can take a reasonable approach, but we haven't defined a reasonable approach. I'd say from the tax preparer standpoint, we're hoping that someone tells the payroll softwares that box 12 or 14 needs an overtime drop down section.
mhm.
If you're an employee, though, and you get overtime and you do have your hours on your pay stubs, now is the time. Go back and start downloading those pay stubs because you're going to need that detail. So go, and it's for 2025. So go back to January, start pulling those pay stubs out and noting what is that overtime if you're capable and get prepared and continue to do it through the end of the year because there's just, from what we can see, no easy way right now.
Yeah. And this is huge. I mean, it's harder because in our shoes, we see a lot of people that are not necessarily proactive
Mhm.
about their taxes, right? Like we're running up as we're recording this, we're bumping up against the September 15th deadline, and then we'll be fast tracked into the October 15th deadline. And in some cases, these are the people that are like, well, I just didn't want to deal with it all year long. I extended, and now I'm having to deal with my taxes. That's not always the case, but you can't be one of those people that's not proactive if you are someone that's in this overtime position. Because here's the reality. I don't like to throw a profession under the bus. Or maybe I do. I don't know. Like you listen to the podcast and you tell me what you think. The reality is that there's a lot of changes going on this year in the tax code. And if your tax preparer is not super proactive, they're going to plug in your W-2 the way it is, and they're going to keep on rolling. So if you've got overtime, you have to be proactive so that you can get cash back in your pocket. One of the bottom lines with this is that you're getting taxed on it right now. There's a deduction for you if you file your taxes correctly. Now the question is, how do we make sure we file the taxes correctly? And as Caitlynn just said, you've got to work on your documentation and whatever that looks like for you.
Correct. I would not trust that we get a W-2 that shows this. I would not trust that your employer has the information. If you're an employer and you want to be proactive as well, see if you can pull the reports and have them ready for your employees at year end. And you could probably gain a lot of favor with them if you can provide them with, these were your regular hours, these were your overtime hours, give them their rates so they can do the math, or the accountant can do the math. As a individual, be prepared to extend. Like if there's a chance that this information's getting put together at year end by some big companies, it's probably not going to be released on time, right? So most likely you're getting a refund if you've over withheld. So be comfortable and be okay with a potential extension, because if we do have to manually back into that, it's going to take more time than, as Seanna said, just plugging in the W-2, because we're going to have to do the actual math on what the overtime is.
Yes. So it's worth it to be patient. It's worth it to be proactive because it's legitimately cash in your pocket.
Yes.
If you do this correct.
For sure. And if you are willing, like if you get a lot of overtime and you want to reach out, preferably after October 15th, you can probably adjust your withholding for the rest of the year if you want to make sure you don't end up with a huge refund. But next year, that's definitely a consideration to take if you're in a overtime field of maybe you don't want to withhold as much. Like I said, I don't know if they're adjusting 2026 tables yet, to be determined, but if they're not, then I would consider part of your tax planning is to adjust your withholding.
Yeah, absolutely. Okay, so let's wrap this up.
Yeah.
I think we've covered all of the areas that we need to just hopefully encourage everyone that be proactive in your taxes. This is an episode more geared towards individuals, as we said. Employers, you can be proactive and win favor with your employees here. But we also understand that there's a lot that's going on come January 1st as you're cranking out W-2s and everything. You can work now to have a plan for how you're going to get that data in your employees' hands.
Yes.
But everyone's going to have to be proactive to get that cash in their pocket that they will be due because of this tax change.
Without a doubt. Some quick fire final pieces. You have to have a social security number. So unfortunately, if you have an I-10, you don't qualify for this deduction. If your adjusted gross income is under $300,000, then you're good. If it's over as a joint filer, then it's going to phase out. So this is one of those deductions that will go down as you make more. Honestly, rightfully so. So those are kind of the pieces just to keep in mind as you finish out the year.
Well, we hope this was helpful, and we will be coming to you in another episode soon with some more tax tips based on this new tax bill.
Yes. And if you want to hear more, you can go to the link in the show notes to subscribe to our newsletters.
Tax season doesn't have to feel like a pop quiz you forgot to study for. Join us for a free webinar on November 6th, where we'll walk you through what business owners actually need to do to get prepped, without the panic, the paper piles, or the endless Google searches. We'll cover what your accountant really wants from you, how to avoid surprise tax bills, and simple steps you can take now to save money later. If you're a service-based business owner who's tired of winging it every April, this one's for you. It's free, it's practical, and we promise to keep the jargon to a minimum. Register at the link in the show notes, and let's make this tax season your smoothest one yet.